Good morning, everybody. Hey, this is the last day of September, the last day of the third quarter. As we get ready to head to the fourth quarter, obviously there's not much in the way of earnings today. We'll talk about some other insightful areas of the stock market as we get ready to head into this fourth quarter, see what news is out there as we end up this third quarter. Thanks for joining us again. We got Dave coming up here in just a few seconds. Before we do that, though, let's not forget that the world we live in today, there are so many things that are out of our control. I want you to know you can take control of your investment portfolio by knowing the amount of risk you have in your portfolio and making sure that it lines up with the amount of risk you should have in your portfolio based on your current circumstances, how close you are to retirement. Give us a call at 863-382-0037. Schedule your core retirement analysis. And with that, we got Dave coming up next.
5.7 Light FM. Wake me up before you go. That's wham there. It's 8:40, 20 before 9. It's time to check in on your money and to see what's going on Wall Street. Phillip Statler from Statler Financial Services and I are putting bits and pieces that we get together. We end up coming up with something coherent somehow every single day. He's on the phone now. Good morning, sir. I trust it was a good weekend, the Knowles notwithstanding.
Well, yeah, that was not a great day there, but hey, it was a good weekend. And as we head into this September 30th, last day of not just the month, but the last day of the third quarter, as we get ready to, guess what, head into the fourth quarter of this year with elections and all the stuff that come with it.
Oh, yeah. Boy, time sure do fly when you don't know what you're doing, huh? Right. Just ask a politician. We ended up with a pretty good week last week. Stocks drifted higher. S&P had a bunch of new record closes, and the S&P and the Dow Jones both up about 0.7% last week. NASDAQ was up nearly 1%. That doesn't show quite as pretty on Friday. The blue chips on the Dow managed to gain 0.33%, up 138 points. Standard & Poor's and NASDAQ had, well, let's call them off days, down 7 and down 71 on the other two indexes. I'm just going to kind of write that off as we want to keep money off the table over the weekend and took some profits, wouldn't you guess?
Well, it could be that, plus it's the end of the quarter. I mean, we're getting to the point where everybody's positioning themselves for today and heading into the last day of the quarter and kind of looking at their portfolio. What do I want in there? What do I not want in there to show shareholders?
A whole bunch of mutual funds are balancing so they keep their promises on percentages, I'd imagine.
That plus, what's dragging and what's pushing up their stock price.
Exactly. Whole bunch of tidbits out on Monday. As usual, it's a slow news day for Monday because, well, half the government sleeps in and the investors haven't done anything yet. So there's not much coming in this morning per se, but things get kind of interesting reasonably quick. Starting tomorrow, we get the JOLTS job openings report coming up. Then on Wednesday, we get mortgage applications, the private payrolls. Thursday, the usual unemployment claims. And then on Friday, that fabled official unemployment rate, which is going to loom kind of large given the rate decrease on the Federal Reserve, I got to believe.
Well, I think so. I'll give you the expectations at this point is that the number's pretty close to where it was last month, 144,000 versus 142. But the unemployment rate is expected to stay the same at 4.2%.
Which we need to make note of the fact is about the highest it's been, and let me say, I had it down there somewhere. Yeah, it was nearly the highest in almost 3 years. So we'd kind of like it to stay there for a little while, or at least maybe even go down a little bit.
Well, yeah, I mean, we've been bouncing 4.3 to 4.2. It's kind of bounced back and forth, I think, the last several months. So we'll see kind of where it sticks at for this month.
Yeah, it helps to remember that, the Fed supposedly has two missions for the price of one. Number one, maintain the inflation rate, which they kind of threw the towel in when we stuck closer to 3% than they promised we would the other week. They also are supposed to maintain maximum employment. So that 4.2% is a little bit above their target of 4%. So a little decrease probably would help the market a bit and reassure them that the Federal Reserve is doing what they're supposed to be doing.
Well, it would, and let's though also remember that a 5% unemployment rate is considered full employment, and so anything below that is better than full employment. So, obviously we would like it to be less, and given the times we're in, that's an important look because as inflation continues and prices continue to stay high, the economy is slowing down. We are seeing companies laying off, and so that number does become more relevant.
Which is going to make those JOLTS reports we get this week look kind of interesting. Do economists still consider 5% full employment? I thought it had pretty much been redefined down to about 4%.
I don't. I read both back and forth.
Yeah.
I haven't adjusted yet, but maybe there are more leaning towards 4%. And that could be because the labor force has slimmed down so much since COVID.
That's true. I remember back in the 70s, 5% was considered full employment. We were quite happy at a 5% unemployment rate. I think today, the very least, the politicians would have kittens at a 5% unemployment rate, wouldn't you think?
Well, they probably would. They probably would because we're so used to such a low unemployment rate.
That is true. Other tidbits coming out today in the morning, talking about beating inflation. The government in Germany reported this morning that their official unemployment rate, or their official inflation rate in Germany, 1.8%. Well, that sounds like La La Land, doesn't it?
It does. They've done a really good job of getting theirs under control, evidently, because we're not even close to that.
Not even in the same zip code. We are looking with a little look askance at midnight tonight because as of midnight, October 1st, the dock workers union is saying they're going on strike. And all I can think when I see that is container ships in the harbor out in Los Angeles, supply chain difficulties, and that widget I ordered from China 3 months ago probably taking another 6 months to get here, don't you think?
Yeah, I got to say, they're not even talking to each other. So that to me is a problem as we don't need anything else, Dave, to push prices up. And that's exactly what this is going to do because the supply chain is going to get cut off. And so prices for what's already here in the United States of those items is going to go up because supply and demand, they can't get it and people still want it. The price is going to go up, and that's not going to help our inflationary picture.
And the time frame could not be worse because all of those containers, including all the stuff Santa's bringing on December 25th, are on a boat right now waiting to be unloaded in Los Angeles Harbor. I mean, our Christmas shopping experience could be a little bit pricier this year just by the time frame they're looking at.
Pricier and more stressful because you may not be able to find what you need to get.
Oh, yeah, expect widgets, expect fist fights over the latest Polly Pockets or something, whatever the hot thing in Christmas shopping is going to be. I hate to be full of stinking thinking, but while we're keeping up our tidbit listing here, Stellantis came out with a release this morning. The people that own Chrysler and Jeep cut their year-to-date guidance, or the end-of-the-year guidance, way back. So not necessarily a good day to have Stellantis or Ford or GM, because I gather it was a big enough cut in guidance to actually be sector-wide now, and it's pretty well tanking Ford and General Motors this morning as well. You found an interesting article. They've now downgraded J.P. Morgan, huh?
Yeah, Morgan Stanley came out and downgraded J.P. Morgan from a buy to a hold, which at least a little earlier had them trading down about a 1.5% this morning. Let's see where we are now, if I can find it real quick. We're down 1.3% right now.
What are they saying? Futures of interest income for J.P. Morgan or what?
Well, evidently they got a little regulatory issue going on that I hadn't really heard about or hadn't seen in the news anywhere that popped up on this report. And so that's, I think, what's dragging us down right now.
Okay. We'll have to do some more research on that. One eyebrow raised in Washington generally is enough to get any of those companies in major hissy fits. Other thing, they're kind of playing musical chairs. If you're on a satellite TV system, you're going to be paying somebody else sometime soon because DirecTV's getting spun off of AT&T and turning around and buying Dish. That's an interesting switcheroo, isn't it?
It is, and it's something, that's been talked about now for off and on for the last 10 years of those two companies merging. And so AT&T is selling off its 70% ownership to TPC, which is the minority owner at this point. And so then they're going to turn around and buy Dish, Dave, for $1.
And the price is
$1. Now, they're also going to have to take on 9.75%. $9.75 billion of debt that Dish TV has to close the deal. And so that's a pretty big price tag for Dish, but it'll combine them and give them a viewership of 20 million subscribers. And they feel like, Dave, that's going to give them a competitive edge so that they can better compete against Netflix and Prime Video and those guys in the future. And so we'll see how that works out for them.
Yeah, the deal also includes ownership of Sling TV, too. So if you're a Sling subscriber, you got a new bill to pay as well. It's kind of interesting. I remember a few years ago when Dish and DirecTV were doing that little merger dance going together, and it was one of those one raised eyebrow at the Justice Department, and they were concerned about a monopoly. Now, all of a sudden, with streaming ending up becoming much more a thing, all of a sudden now they aren't half as worried about the possibility of anti-competitive move because, well, the satellite almost seems like old technology now in a day of streaming, doesn't it?
Well, it does. And so you're right. That's taken kind of that whole area of concern out of the picture. And that's probably why this deal's finally come together.
Absolutely. The other tidbit I've got is when we get to the overseas markets, you'll see what I mean. The stimulus effort in China is no longer considered uninvestable. Chinese markets have been going absolutely crazy since the government has been loosening up the money supply over there. And, of course, filing buy orders with the people that buy on their stock market. So far, China looks like a really good investment until, of course, the government issues a sell order, right?
Well, that's right. I mean, you've got the things like NIO, the electric vehicle company over there, up 13% this morning. You've got Alibaba up 4%. You've got, it just goes on and on. The Chinese companies that are up. And it's because of the infusion of cash that's coming into those companies.
And the one-day changes on the exchanges, like I said, when we get to that, it's absolutely mind-boggling. You don't see 10% changes on a stock exchange in one day unless something major happened. Well, just like Chinese growth rates, things get amplified over there. That's pretty much the picture this morning so far. It was a mixed day on Friday before we closed out the last full week of the month. Last day of the month, 45 minutes early. How are we doing?
Well, we got some red ink this morning, Dave. We've got the Dow down $69, which is a little between 1/10 and 0.2%. The S&P 500 is down 1/4, as well as the NASDAQ 100 down about 1/4% this morning. So not such good news there as we head into the day. My commodities just disappeared. Let me see if I can find them real quick. I cannot. I'm sorry. They just disappeared.
I got the delayed ones here. Gold is off by a little bit, about a little over 1/3% at 26.5760 an ounce. Silver also off by almost a full percent, $31.49.5 an ounce. And crude oil is still hanging in the 60s. It's up a little bit from the overnight close, but we're at $68.39 a barrel. Quick fill up before somebody starts buying oil, Phillip.
Hey, that's good. I love to see it there.
That's pretty much it. Overseas markets, I mentioned Asia Pacific Rim went crazy. Outside of Japan, where they had a bad day yesterday, everything was up. The mainland Chinese markets, one of the two indexes was up 10.67% at the close this morning at 6 a.m. The other mainland Chinese market up by 8%. And the, let's see here, let me find here. Oh, yeah, the Hong Kong exchange was up by 2.5%. So, yeah, people are getting fat and sassy on the Asian Rim. Across the other pond in Europe, they're kind of letting their bull crud detectors go off on the Asian rim. They're off by about 0.5% or a little bit more than that halfway through the European trading day. I have no green ink over in Europe at this moment in time. Getting a retirement plan together to make it work for everybody, well, Asia looks pretty good for the moment, but what could happen tomorrow? I think I need a better plan. How do I find you to get that plan?
David, give us a call at 863-382-0037 to schedule a core retirement analysis where we'll analyze where they are and help them make sure they're on the right path to the retirement they always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me back again here tomorrow, same time on Light FM. Good to hear your voice, sir, and I'll see you then.
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I hope you had a great weekend. Look forward to the week. Join us again tomorrow as we head into the fourth quarter of 2024. Take care, and I will see you tomorrow. Bye now.